Hello, everyone. Welcome to the market opening bell on Tuesday, July 29th, your 10-minute guide to the stock market. US President Trump announced that the US has reached a new trade agreement with the EU, imposing a 15% tariff on EU goods exported to the US. Von der Leyen stated that the 15% tariff rate is the best outcome the European Commission could achieve. Additionally, tariff agreements for three key sectors, steel and aluminum, chips and spirits, remain pending. US Commerce Secretary Lutnick said the EU will open its 20 trillion US dollar market and for the first time fully accept US automotive and industrial standards. The EU will also purchase 750 billion US dollars in energy products from the US and invest 600 billion US dollar in the US. With only a few days left until the August 1st deadline, Trump indicated he might send further letters. On the US-China front, reports suggest trade talks may extend the tariff truce by 90 days, originally set to end on August 12th. During the truce, both sides will refrain from imposing new tariffs or taking actions to escalate the trade war. The Chinese delegation is expected to press the US on fentanyl tariffs. Both sides will reaffirmed their positions on key issues, including U.S. concerns over Chinese overcapacity. The Hang Seng Index opened 70 points higher on Monday, later peaking at a 279-point gain to 25,667 and closed up 173 points or 0.7% at 25,562. The H-share index rose 26 points or 0.3% to 9,177, while the Hang Seng Tech Index fell 13 points or 0.2% to 5,664. Total market turnover was 250.2 billion Hong Kong dollars. Southbound trading turnover was $133.4 billion, with southbound funds net buying $92.53 billion in Hong Kong stocks, including net purchases, China Life Insurance totaling $1.146 billion, China Construction Bank $702 million, Tencent $597 million, Alibaba $437 million, Microport $307 million, Ping An Insurance $247 million, SMIC $154 million, net sales Meituan $363 million. Technically, the Hang Seng Index remains capped by resistance at 25,700, likely consolidating narrowly between 25,350 and 25,700, filling the upward gap between 25,130 and 25,228 would indicate a healthier trend. Mainland Chinese markets closed higher, with the Shanghai Composite Index up 4 points or 0.1% at 3,597. The Shenzhen Component Index up 49 points or 0.4% at 11,217, and the Chinex Index up 22 points or nearly 1% at 2,362. Combined turnover in Shanghai and Shenzhen was 1.742 trillion yuan, down 45.1 billion yuan from the previous day. The renminbi US dollar central parity rate was 7.1467, down 48 pips from 7.1419. Insurance stocks performed strongly, with Ping An Insurance up 3.5%, CPIC up 3.9%, and China Life up 1.8%. Reports indicate the China Insurance Industry Association announced a reference assumed interest rate for ordinary life insurance products at 1.99%. Per the January 2025 notice from the NFRA on linking assumed interest rates to market rates and dynamic adjustments, the association releases reference rates quarterly based on macro interest rate trends and industry asset liability management. January and April rates were 2.34% and 2.13% respectively, and the current 1.99% is 25 basis points or more below the actual rate of 2.5% for two consecutive quarters, necessitating a downward adjustment. Insurers like China Life and Ping An Life announced adjustments to the maximum assumed interest rates for newly filed products. 2% for ordinary insurance, 1.75% for dividend insurance, and 1% for universal insurance minimum guaranteed rate. Traditional and universal insurance rates were cut by 50 basis points and dividend insurance by 25 basis points. All products will see sales by August end. Lower assumed rates will reduce new business liability costs, gradually improving average costs as new business dilutes existing stock. With stabilizing long-end rates and a strong stock market, life insurers' spread loss pressure is expected to ease. Post-adjustment, dividend insurance guarantee yield is only 25 basis points below traditional insurance, with floating yield designs enhancing customer appeal, likely accelerating the shift to dividend insurance and further easing insurers' rigid cost pressures. Wuxi AppTec reported midterm results for the 6 months ending June, with revenue of 20.799 billion yuan, up 20.6% year-on-year, meeting guidance. Continuing operations revenue was 20.41 billion yuan, with U.S. client revenue at 14.03 billion yuan, up 38.4%. European client revenue at 2.33 billion yuan, up 9.2%, and Chinese client revenue at 3.15 billion yuan, down 5.2%, showing heavy reliance on U.S. clients. Net profit was 8.287 billion yuan, up 95.5%, slightly below the guidance of 8.561 billion yuan. Earnings per share were 2.92 yuan, with a midterm dividend of 3.5 yuan per 10 shares. With expanding capacity, continuing operations order backlog was 56.69 billion yuan as of June, up 37.2% year-on-year. The company raised its 2025 continuing operations revenue growth forecast from 10% to 15% to 13% to 17%, with full-year revenue guidance revised from 41.5 billion to 43 billion yuan to 42.5 billion to 43.5 billion yuan. New Oriental and Huaneng Power will announce results today. New Oriental's fiscal fourth quarter ending May 31st is expected to report revenue of $1.187 billion, up 4.4% year-on-year, with earnings per share of $0.029, up 47% year-on-year. U.S. markets fluctuated narrowly on Monday as investors awaited the Federal Reserve meeting and economic data. The S&P 500 closed up 1 point at 6,389. The Nasdaq rose 70 points or 0.3% to 21,178, and the Dow fell 64 points or 0.1% to 44,837. The Nasdaq Golden Dragon China Index fell 52 points or 0.7% to 7,653. Tesla rose 3%, confirming a $16.5 billion chip contract with Samsung Electronics. Musk noted 16.5 billion is the minimum, with actual output potentially several times higher. Samsung's new Texas megafactory will produce next-gen A16 chips for Tesla. Nvidia rose 1.9% to a new high, boosting chip stocks, with AMD up 4.3%. Meta rose 0.7%, Microsoft fell 0.2%, Amazon rose 0.6%, and Apple rose 0.08%. Economic data showed the Dallas Fed Manufacturing Index for July rose to 0.9 from June's minus 12.7, indicating stabilization after 5 months of decline. Factory production surged, with the production index at 21.3, the highest in over 3 years. New orders remained weak at minus 3.6, but improved from June. Capacity utilization and shipments turned positive. Trump commented on the upcoming Fed meeting, stated the U.S. economy is performing well without rate cuts, but would improve further with cuts, insisting the Fed must cut rates this week as smart people would. Our stock pick today is JD Logistics, stock code 2618. JD Logistics continues to deepen its focus on the core track of integrated supply chain, leveraging comprehensive network coverage, robust digital and intelligent capabilities, and profound industry insights to provide a wide range of integrated supply chain solutions and high-quality logistics services to numerous clients, achieving high-quality growth. The group previously announced the recruitment of full-time riders to participate in JD's delivery services. The group believes this arrangement will enrich its solutions and service offerings, expected to enhance synergies in operational segments such as last-mile fulfillment and improve operational efficiency. In the first quarter of this year, the group sustained the strong growth momentum from 2024, achieving revenue of 47 billion yuan, a year-on-year increase of 11.5%, driven by a 13.2% increase in revenue from integrated supply chain clients and additional revenue from other clients. Net profit was 610 million yuan, surging 89.5% year-on-year. In January this year, JD Aviation's 10th owned freighter officially commenced operations, further strengthening JD Aviation's fleet and marking continued progress in building its logistics networks across China and globally. Meanwhile, JD Aviation launched the Sunshine China to Bangkok, Thailand international route in January, with its international route network now covering countries including South Korea, Vietnam, the Philippines, Bangladesh, Thailand, and Malaysia. In the first quarter, JD Logistics Warsaw, number 2 warehouse in Poland, officially began operations. Currently, JD Logistics has established 3 warehouses in Poland. The Warsaw number 1 warehouse, opened in 2022, has become the exclusive warehousing and logistic operator for the online channel of a well-known Polish retail chain, providing customized warehousing and logistics solutions for various product categories. It currently handles thousands of SKUs for this client across Europe, covering categories such as 3C electronics, daily necessities, and home appliances. Additionally, JD Logistics, in collaboration with a well-known Chinese automotive brand, opened a spare parts warehouse in the Middle East in the first quarter, which has become one of the largest automotive spare parts centers in the region. As of March 31st, 2025, the group's warehousing network covers nearly all counties and districts nationwide, including over 1,600 warehouses operated by the group and more than 2,000 cloud warehouses operated by third-party owners on its cloud warehouse ecosystem platform. The total managed warehouse area exceeds 32 million square meters, including the area managed by cloud warehouses on the platform. Recommended buy price 13.9 Hong Kong dollars. Target price $15.3. Stop loss $13.2. I do not hold the aforementioned stock.